options trading isn't just a degen way to gamble your money away like a lot of people think and a lot of people do. Options trading is also a good way for you to make passive income plays. So low, steady income throughout the year, throughout months, weeks, whatever your strategy or choice is. So today, this is what we're going to be covering in today's video. Welcome back. Today I'm going to show you 3 different strategies that a lot of people use to make passive income and which ones you can do here on the topics for you to try it out today. So understand that passive income is most likely not going to be degen returns like you would be expecting if you were speculating. So you won't be expecting 500, 1000, a million% throughout the year. No. You will be looking at 2 digits, maybe 3 digits if you are at the edge of risking it all. But when you compound this throughout the years, this is what makes a good portfolio stand out and have longevity, meaning that it will outsmart and outlast every other portfolio that is mainly degen, because it will be compounding at a slow and steady rate. So these strategies that I'm going to be showing you, they are strategies that are applied not only for crypto options, but a lot of institutional wealth in the stock market as well. So the first way to make passive income is to selling covered calls. This is most likely the most basic and simple way for you to generate income. How does it work? Well, for you to do a covered call, you need to own the underlying asset. So let's say you own 1 Bitcoin, and 1 Bitcoin right now it is trading at $67,000. So what you're going to do, you're going to go above the strike. So let's go for $75,000 and you sell that call. So you sell a $75,000 call and you collect that premium. But to sell a call, you're going to be using your Bitcoin as collateral. So you're going to be holding that Bitcoin there and collecting, let's say, $200 for that call that you just sold. So what is going to happen? Well, the weeks are going to go by, or whatever expiration you choose. And by expiration date, if Bitcoin is below the strike that you sold, so again, we sold a $75,000. And if Bitcoin is below that $75,000, I get to keep my premium, so the premium that I collected from selling the option, and I get my Bitcoin back. So let's say if Bitcoin is at 72K, I will get my Bitcoin back from the collateral because the option will be closed, it will be expired, worthless, and I keep the premium that I collected when I sold the option. So if we sold for $200, I will keep my Bitcoin plus the $200 that we made. This is the profit. But what happens if Bitcoin is above that strike? If Bitcoin, for example, is at $76,000? Well, you're still going to be profitable. It will be a win for your portfolio. Your portfolio will have increase in its value because before the Bitcoin was worth $67,000. So in USD value, your portfolio was valued at $67,000. And now Bitcoin will be at 76, but you will sell this Bitcoin at $75,000. It will be sold because it is there as collateral and you will still keep the premium. So your total portfolio will be the strike plus the premium. So if the strike was, I think, 75,000 plus the 200. So you would have $75,200 in USD value of your portfolio. So you started with 67 and now it is a 75,200. So you profited. Of course, you won't hold the Bitcoin anymore and Bitcoin will be above the strike. So there will be a loss there if you were compared to the current price of Bitcoin, but it is a profitable strategy. You are still in the green overall. This brings us to the next thing. What usually people do when they're selling calls, they also sell puts. Selling puts as an income is called cash secured puts. This is almost a way to DCA or to enter at lower prices into a stock. And for crypto, it is also a way for you to make income. So how does that work? Well, you do have an amount of money. Let's say you have 60K US dollars. So you have 60K there in your wallet, in your account, and you want to buy a Bitcoin. But Bitcoin is trading at 67K, but you wouldn't mind buying it at 60K. Well, so what do you do? So you sell a put, let's say at 57,000. So if Bitcoin goes below the 57,000, you get to buy Bitcoin at 67,000. And not only that, you also get to keep the premium because you sold a put. So you sold a put at 57,000, you collected premium for it. So let's say you collected $200 and then you bought a full Bitcoin at 57,000. Even if Bitcoin is lower than that, for you it is a win because you wanted to buy Bitcoin at 60K and now it is even lower than that. So for you, it is a win-win situation. Of course, the Bitcoin price, it is more expensive than the current market price, but again, it is cheaper than what it was before. So you should be overall happy because you entered at a lower price than when you wanted to enter. You collected premium, which will lower your average cost, and you bought Bitcoin at a discount rate. than it was a few days or a few weeks before. But what happened if Bitcoin never reaches $57,000? You sold a 57K strike, you collected a premium, but Bitcoin stays at 65, 66, 60. Then your option expires worthless and you collect the premium. And now you have the premium and you still have the cash. And what you can do this option over again. So you keep doing it over and over and over by either just collecting the premium and keep selling these options, or by selling these options long enough that Bitcoin will go under the price and you will buy Bitcoin at a cheaper rate, plus all the premium that you collected. Especially in the stock market, what people do is all the months that they keep selling these options and collecting premium, once they actually buy the underlying asset, all these options that they accumulated, they will be written off in the average price of the underlying asset. Because again, if you bought the underlying asset for $10, but for months you collected $1 and you actually sold puts for 4 months, so you collected $4, your average price actually won't be $10. It will be 10 minus the 4 in premium that you collected. So you will be $6. Your average price for this underlying asset is $6 because it is the 10 that you paid off, but you got 4 back. So you actually have to subtract that one to see the average price itself, how much you spent. And last but not least, this is one that you actually can perform today. Right now, you can go to the topics and do this. It is vertical spreads. What are vertical spreads? Well, if you don't know, we have a video right here covering vertical spreads, when to open one over the other. So you check out this video to understand when should you use a put credit spread or a call credit spread. So once you see that, you can go back right here and we can keep going. So this strategy profits from a stable or a moderate moving market, and it generates the income from the difference in strikes that you buy and sell. So what you do, you sell a higher strike and you buy a lower strike, and the difference in how much you sold for, so for how much you pay, is the credit that you get. Usually credit spreads, you get money when you open the position instead of having to pay when you open the position. And then when you close, if you got more money when you opened than when you had to pay when you closed, you get to keep the profit. This is the premium that you get from the option itself. So let's say you're bullish. You believe Bitcoin will stay above the $67,000. If you do a bull put spread or a put credit spread, whatever you want to call it, and let's say you sell a 64 and you buy a 60 strike. So this is the spread itself. If Bitcoin stays below the $64,000 mark, then you're going to be profitable. But how can you see that visually? Well, we can go right here to the topics, to the Earn tab. You can see the Earn tab right at the right top corner there. And let's say to March 31st, you believe Bitcoin will stay above the $65,000 strike. So in our case, this one right here, above 65K. If you believe so, this is pretty much a bull put spread, meaning that you're bullish that Bitcoin will stay above this price. So what you can do, you can click on open position, and here you put the amount of dollars you can open this position with. So if you put $500, you're going to make 85 and 50 if Bitcoin stays above this 65 mark. So you do your due diligence, you do your analysis, you know that the 100-day moving average is at 60K, but you see that the Bollinger is starting to revert. It is showing that Bitcoin is climbing again. The 9 EMA is at 62.5. You believe it will go up. So the 65K seems like a good choice for you. So you go right here and you open the 65K. You can see that I did something similar here at the bottom. I have both an ETH and a Bitcoin bull put spread, meaning that I believe Bitcoin and Ethereum will be above. For Ethereum was 2,700 and for Bitcoin it was 54,000. So you can see I will be profitable on both of these. If everything keeps going as it is, I will be profitable on both of these options for a good chunk of money that I will be making back. So now that you know how to do this, let's compare everything. Let's do a comparative analysis between covered calls, cash secured puts, and the vertical spreads. So covered calls, the pros and the cons. The pros is that it generates consistent income month over month, and it is pretty low risk if you own the underlying asset. So if you have one Bitcoin, you can use that Bitcoin to generate income. And if you eventually have to sell the Bitcoin because the option itself got assigned, it is not too bad for you because you spent months collecting premium. So that premium is a yield on that Bitcoin, and you sold Bitcoin at higher price than you bought it for. Then you can just go back and buy more Bitcoin and repeat the strategy. The cons is that, again, if Bitcoin goes above your strike, but it keeps going above your strike, it is not as profitable because you would have made a lot more money just by holding Bitcoin itself. Unless you spent years collecting premium, that can be checked off to sum the amount of money you sold Bitcoin for. So Bitcoin, you sold it at X plus the amount of premium you collected. If it is higher than the current price at Bitcoin, that is the current price that Bitcoin is trading, then it is a profitable strategy. Cash secured puts. The pros is that you buy the asset at a discount. Again, because you're selling a put, if it goes below that strike, you're buying that asset at a discount compared to the day that you open the position for. And you get to earn income if you keep doing that week after week, month after month, whatever time frame you choose for your expiration date. And the con is that it requires you holding cash. So the cash will be there. You have to hold this cash to buy the underlying asset if needed to be. And the vertical spreads, the pros is that you have the premium from the difference between selling and buying an option. This is a good way for you to collect premiums week after week. And the cons is that it requires a little bit more of precision when it comes to market direction. Instead of the other two that we just saw, you need to have a little bit more caution to understand where markets won't be or what will the market do throughout the lifespan of this vertical spread, because it needs to be a little bit more specific than just selling an option. But another pro is that it limits your risks. So you have way less risks than just selling puts or selling calls, as we saw before. So to wrap it up, these three strategies are very good ways for you to make passive income. Are they by holding the underlying asset or by just holding cash and trading like a cash settled account, which is what you can do on Bitopics now. So vertical spreads is something that we are very passionate about here. It is something that is proven very, very good for you to make passive income or for you to make more degen plays if you want to, because again, you can go for debit spreads, you can go for riskier spreads. We have it for everyone and we have it simple in a way that everyone can do it. But these are not the only strategies that you can use. You can use more advanced strategies. So if that's something that it is interesting to you and you would like to see more, please comment down below and I'll make a video specifically on advanced strategies here for options. So hope you enjoyed. If you did, comment down below something just to help with the algorithm. And that being said, I'll see you guys in the next video. Peace out.